You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
And that rockin' tune means it's time once again for the option block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of Brexit, a little bit of volatility, and you have the tasty, tasty stew. That is the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network. 15 programs for you guys to choose from. You guys know what they are, but if you don't, TWIFO, This Week in Futures Options, one of our most recent additions, as well as if you can't get enough silliness in your business, then maybe the business show is worth it for you to check out as well. You can find both of those, as well as all of the archived episodes of the option block and every other program on this here fine network. Easiest place, the mothership, the flagship, theoptionsinsider.com. Making some tweaks, some changes up there to make it easier for you guys to follow along with your favorite shows via email and things, so you guys can have a lot more fun with the different shows you like to watch and listen to. And mostly listen to, because we don't really do video, but we'll listen to and follow and all the other fun stuff you can do. Of course, you can also get them iTunes, TuneIn, Stitcher, and so on and so forth. Google Play Podcasts if you are so inclined. And, of course, via our mobile app, which is available everywhere, and I'm happy to say has all the recent additions to the network in there as well. So we're all good on that front while you're listening, while you're streaming via the app, of course, or however you like to listen. Make sure you send us your questions, your comments. We love to hear from you guys. In fact, we're going to give you some time on Thursday's show because it is mail block time. But before I do that, let me introduce one of my cohorts here on the old All-Star panel. You know him, you love him, as Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Oh, always happy to be here, getting geared up for the 4th. And just want to say about the business show, folks, I've listened to it, and all the filters that you imagine that we have for Sebastian on this show, which are probably there with the editing on the days that we're not live, I would actually almost even retitle that show Seabass Unfiltered. It's a very interesting show and for sure worth a listen.
Yeah, and leave the kids at home for that one. It gets the explicit tag, our first explicit tag on the old network as well, so we can thank good old Mr. Greasy Meatball for that as well. Speaking of the Greasy Meatball, we just had him on, but he's having some shall we say Skype difficulties. He hasn't paid the Skype bill over there in the global HQ out in, I believe it's Riverside, Illinois, out there on the way to good old St. Charles. So we're going to get rolling without him, and then we'll see if we can bring him on after the fact. But meanwhile, it's time. Uncle Mike, you know what time it is, and I'm sure you guys at home know as well. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. You guys know the drill. This is the portion of the program where we break down what was moving, what was shaking, or in today's case, rallying in the old market today. We are recording this. No live stream, unfortunately. We'll be back to the live streams next week. We are recording this on Thursday, June 30th, for all of you playing the home game, 4 o'clock Eastern here, where I am 3 o'clock Central. So right after the market close. An intriguing day, but before we get to that, let's welcome on the greasiest of greasy meatballs, Mr. Mark Sebastian from Option Pit. Mark, welcome back to the Option Block, sir.
Good to be here. Great to be here. Happy to be here. Have no fear, I'm here.
We do indeed have no fear, because certainly nothing to fear on the old street today. It's pretty much all green everywhere you could look, with the exception of volatility, but we'll get to that in a little bit. Like we said, the Brexit fear, at least for the time being, the Brexit uncertainty, call it what you will, seems to have been shaken off from the marketplace. Most of the major indices rallying pretty darn hard. The S&P up about a little over 1% on the day. The Dow closing up about 1% as well, 1.1%, and the Q's up about 1% as well. So all of them finishing up pretty strong. Perhaps not as strong as they hit about intraday here. The S&P actually not that much higher, only about 3.5 handles higher. So it didn't finish off that far off the highs for the day. And of course, with all this upside, a little bit of downside when it comes to the vol, the VIX stuff, VIX cash off about half a handle, hovering in that 16 range, which maybe we'll start there, Mark, is a place none of us predicted on last week's volatility view. So we all get to eat some humble pie there, sir.
Yeah, no, it's been pretty shocking the way they've just absolutely demolished this stuff in pretty short order. And vol is in, and vol is in hard. Pretty shocking.
It's been so shocking, actually. We put out our question of the week earlier this week, and clearly we wrote it up earlier this week because we gave people guesses for where will VIX close on Friday in this first trading week post-Brexit. And our choices at the time were above 25, 22 to about 25, 19 to about 22, and then below 19. Guess which is crushing it right now?
Below 19.
Yes, you are a smart man. I've always said so. Below 19, crushing it with about 60% of the vote, because since this poll went live, it's pretty much been nothing but below 19. So the great VIX apocalypse currently happening before our eyes. Still an optimistic 22%. Predicting about 19 to 22. So some people still feeling the love. As of tomorrow, we're going to get a decent rally and then maybe a decent sell-off in the broad market. 13% saying about 22 to 25. So still some optimists out there from a vol perspective. And the hardest of hardcore saying 6% saying above 25 by tomorrow's close. So they're expecting some rocking and rolling, Mr. Seabass. What say you to that?
I guess so. If you look, this is our 6th day in a row of 1%. We are coming off that quarter, so it's the first day of the quarter that can lead to some selling. I wouldn't be shocked. We don't have non-farm payrolls tomorrow, so I wouldn't be shocked if we did see a little bit of a little vol uptick. They tried all day to dump vol. At one point, the VIX was down like 1.2, 1.3. And it is currently, getting ready to close down, 1? Something less than 1, 60 cents. And that is because, we continue to move. 1588 is where the VIX is looking to close. I mean, we continue to move. Nobody wants to dump this stuff. And I'll be honest, I'm a little nervous about tomorrow. I think we could absolutely see some price action tomorrow. Some things moving things around tomorrow.
Lots of things moving and shaking. You're right. I would definitely be uncomfortable unloading a lot of vol at these levels with so many unknowns still afoot. We really don't know a heck of a lot of anything right now. I mean, they voted to leave, but it's a non-binding thing. The manner in which they will leave, the time frame in which they will leave, all completely up in the air still. So the notion that we've somehow digested all this 3 or 4 days in seems kind of foolish, perhaps even a dash of hubris.
Indeed, it does. And so it'll be interesting to see where everything lands.
Before we move off of VIX really quick, I know you wrote up something for everyone's favorite. I know my favorite, Mr. Kramer, earlier this week. What did you send over to him to spout for you on his show this week?
Well, I was talking about the fact that on Monday we saw kind of VIX break a little bit, and that if we saw more follow through, we could really see a rally here. And lo and behold, we saw a lot of follow through, and we saw a lot of rallying. Vol got, they decided that they were going to start selling vol pretty early on Monday, and then really followed through with it. If you watched VVIX and VIX on Tuesday, you knew that the fear was off, the pressure was off that gauge in particular, and something was up, and that is exactly what kind of drove things.
Yeah, we don't talk about VVIX a lot on this show. We talk about it more on vol views, but VVIX back south of the 100 handle for the first time in the last couple of weeks, so that perhaps indicating you're right, perhaps some interesting stuff going forward. Perhaps the storm has abated momentarily. Not that hovering around 100 is that low for VVIX. It's still elevated. But it's off the recent lofty highs of somewhere around 130, I believe, recently out there in 132. It hit about almost a week ago out there in VVIX land. So that's not quite as lofty as those, but still perhaps more shoes.
Pretty lofty.
Yeah, more shoes.
Pretty lofty.
More shoes yet to drop. Here we are, Rock Lobster celebrating his birthday yesterday, an epic, I believe.
I know.
I believe it was his bicentennial. He is now 200 years old, and he's still posting in our show chat. So what's this guy got to do to take a day off here? Go celebrate yourself. While he's celebrating, Uncle Mike, what caught your eye in today's activity, sir?
Bonds, and more bonds. What caught my eye, if you take a simple look at a chart over the course of this whole Brexit thing, you'll notice how we went down quite a bit in the S&P, and then we came right back up. We're still not quite to where we were on the close on the 23rd, but we're pretty close to being back where we were pre-Brexit. And the thing that I'm noticing with the bonds, if you look at both IEF and TLT as an example, it's pretty much the same thing. So not the same. I mean, there's been very minimal movement since this whole, basically, I don't even know what you want to call it, the Brexit dump and rally, whatever you want to call it. And so what's concerning to me as a bull is the fact that, okay, we have this giant sell-off, and everyone's buying in again as of over the course of the last 3 days. Now, typically, this is not a huge volume trading week just because of the fact that we have the holiday coming up and that type of thing. But what concerns me is that how come, Pete, where's this money coming from if people aren't selling their bonds? So that's one of the things that's concerning to me, that number one, like to add to what Mark said, is the fact that we're at the end of the quarter. There could be some quote unquote window dressing that's going on. But number two, if this is a low volume window dressing rally, and the fact that we still didn't quite get back to where we were pre-Brexit, not to be a doom and gloomer by any means, but I'm keeping a lot of powder dry for the S&P exposure that I have going into this weekend. That's for sure. Yeah,
I'm with you. I don't disagree. I think there is still significant risk of things softening up. I think you got a lot of excitement around the 4th of July. It's Independence Day. So we're celebrating Independence Day at the same time we're celebrating, I guess, Britain's Independence Day, call it. And maybe they would have voted stay if we told them that Independence Day leads to Donald Trump running for president. Because they were calling it their Independence Day, and I was just, obviously I'm just making a joke, but maybe that's what's happening here. Is we're all so excited about Independence Day that we are officially celebrating our independence. So why not crush ball, right?
Yeah,
I'm going to fireworks on the 4th of July flat.
Yeah, that is a factor, of course. Here in the States, we are heading into a long holiday weekend here for the July 4th. So we do typically see a little bit of vol runoff leading into these long weekends. But that's in a vacuum, and clearly we're not trading in a vacuum right now. There are a lot of other shoes and things afoot out there to consider. So people who are just coming in, just annihilating vol because it's the long weekend, they're kind of missing, I think, the bigger picture of what's lurking out there. There are certainly, like we said a couple of weeks ago, when people were crushing all that vol ahead of that one poll before the actual vote had been tabulated.
Yeah.
And it seemed perhaps like they were counting their chickens a little bit too soon. Maybe we're getting another whiff of that here. The market, the short-term memory of the market, not so good. I think they've had some head trauma. Just the maybe the recent punch from Brexit has just shocked their memory, because it seems like we're getting setting up for a little bit of a repeat. Again, this weekend could not be as traumatic as Brexit, but you never know, the other shoe could drop in a long weekend.
Yeah, because we've got non-farms coming up next week, and so there's a reason why vol couldn't get below 16%. People finally said, this is cheap enough, and that was that. Yeah. And that I think did it in.
Cooler heads prevailed clearly, and they said, "Wait a minute."
Yeah,
there are still.
This has gotten too far.
Yeah,
too far, too fast. We're done.
Too far, too fast. Speaking of too far, too fast, a lot of things cooking in the rest of the world of options and derivatives. Our friends over there at the CFTC looking to expand their reach into the world of derivatives. Are everyone's favorite friend in the markets, Elizabeth Warren, has trying to expand that reach. I think Mark's reaction says it all. No matter what side of the fence you're on politically, when you see kind of some of her comments about the marketplace and how her quote unquote understanding of it, or perhaps lack thereof, it does give you pause when these people are now proposing this sweeping legislation to give the CFTC what they're terming, quote, a stable funding stream and the tools necessary to help deter future illegal acts. Speaking of illegal acts in the CFTC, a corollary to that, a lot of people asking us, we put up a headline through our news feed on the website today about a former SIBO director being charged with fraud. A lot of people hitting us up saying, hey, what's going on with this? Do you know this guy? I am not familiar with this guy. The CFTC charged Alvin Wilkinson with fraudulently accepting about $7 million for trading on behalf of 30 people from 1999 till now. He also was a director of the SIBO. So he was there from 01 to 04. So I overlapped with him. I think you did as well, Mark. I don't know this individual. Are you familiar with this guy? A lot of people hitting us up saying, who is this guy?
No, I have no idea who that is. Now, that's back when there were still enough people on the floor you didn't know everybody.
Yeah, that's true. There was.
So I'm not sure who that is.
This guy apparently stealing, or at least according to the CFTC, pocketing about $7 million over the course of 99 until recently. So that's a pretty long stretch of time. They're saying, he misappropriated it. Investors, including professional associates from the SIBO. So they're claiming that he scammed some fellow people at the SIBO. He sold fraudulently solicited money to trade in a portfolio of financial instruments. That's about as generic as it gets, including SIBO options and futures at the NFA suspending him. So interesting stuff. Yeah, I don't know this individual off the top of my head, but again, Mark's right. That was back when people actually traded down there, so it is possible not to know. Unlike today, when you walk down there and you see the same 8 guys, it's a little bit of a different story. We'll stay on top of that. Kind of weird, a little bit distressing stuff over there. Speaking of weird and distressing, I think it's that time in the show. Let's move on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we break down the weirder, the wilder, the sometimes just downright head-scratching side of the world of options. We walk down the dark alleys, listeners, so you guys don't have to. And sometimes hidden in those dark alleys, there are some riches. I think we'll get to that, Mark, before we get into what we have prepared today, because some interesting stuff firing off. If you guys recall, listeners, a couple of weeks ago, we were chatting about some weird paper out there in Hershey, ticker symbol HSY. As I recall, Mark, people were gobbling up the par calls, the 100 court.
Yes, yeah, the July pars, and actually they bought the June 105s, and it ran up the vol. And after June ran off, they kept buying July. Open interest on those July par calls was 20,000. That's more than I think the average open interest in Hershey. So it's interesting. A lot of people think because you've heard of a company, they're going to have a lot of option trading. Not always the case. Hershey's is one of those, doesn't really trade that much. So obviously these July par guys, pretty smart. They were well-timed with their trades, let's just say, because those par calls they bought for between, about 85 cents up to about $1.90 were worth well over $15. And those par calls trade as high as, I think I sold a couple I was carrying at like $18. So they made a lot of money on those. I mean, if you consider the 20,000 in open interest, somebody made about $8 million. Somebody made about $8 million. Not bad.
So you're piggybacking
Not
on the
bad
old,
at all.
Piggybacking on the old, odd block, huh? Sometimes it pays off.
You have to.
As in this case.
No, I mean, if you, it's sometimes you have to understand that customers are doing stuff for stock or they're selling or buying. When you see kind of weird, blatant out of the money call action where they're willing to pay whatever, they don't care. Oh, you want 80 vol for that and expires in a week? Sure, I'll pay that. That is a sign that you probably want to jump on that piggyback because something is up. So that's actually one of the big things I look for is, oh, look at this. They're willing to pay 250 vol for something that expires in a week, and August is trading 30. Huh, maybe something is up. That's typically when I'll hop on.
And that one thing being up today is, of course, Mondelez making about $23 billion bid for Hershey. That being reflected, of course, in the stock. The stock gapping up well over that par strike, getting up as high as Mark said, almost 118, about 117.80, and then closing the day up about 16 handles or nearly 17% to right about 113.5 on the day. And those par calls, after trading pretty high, went out at about 13.65 at 15. So figure in the 14 plus range for those. Not bad for something you paid $1 for or 80 cents for. Still open. About 4,000 went up today, so they probably closed out. Some of these looks like maybe a vertical went up as well today here. Par 110. So we'll see. Maybe the timing of these being a bit dubious. I'm sure all the expanded powers at the SEC and others out there maybe taking a second look at this one. But either way, once in a while, it does pay to listen to the show, listeners. Not all the time.
Yeah, if you all you did was trade off this highlight of the show. This show has made you enough money for the next couple of years. You should buy everything that they hawk, and you'll still come out ahead. That's how good that trade was. That and the Monsanto. We're 2 for 2 on really strange, way out of the money, near dated call trades.
We also had that guy who dumped a bunch, I believe, of the Men's Warehouse. No, he dumped stock, bought calls, and dumped a ton of stock. And he looked pretty good on the stock leg, at least. He made a few $1 million there as well. Again, we don't recommend stock plays here too often, but clearly the stock was what he was going for on that one. All right, let's move on to another name that does some paper of late and doing decent paper yet again today. This is VIX, I think you pronounce that, VIX. Of course, is the ticker symbol. VIX cash closing today, 1586, like we mentioned earlier in the show. Well north of the 600,000 or so ADV. It's been pushing about 750 or so today. So a pretty voluminous day out there in VIX land. Only about 1.5 to 1 calls over puts. Again, the VIX selling off today, so maybe obviously puts getting more of a boost than you might normally see out there in a given day in VIX land. And speaking of a weird boost out here in VIX land, that's exactly what we saw. We don't see we don't talk about a lot of iron condors going up in the odd block, particularly not in the indexes or let alone the volatility products like VIX, and that's exactly what we saw today. It was a longer-term iron condor. In particular, it was the SEP Iron Condor, SEP 13, 15, 19, 21. Again, Iron Condor, that's going to be 4 strikes, listeners, so bear with me here. Customer picking up about 60,000 of the SEP 13 puts, doing that for 13 cents, turning around and selling out 60,000 of the SEP 15 puts, doing that for 55 cents. So again, he's selling out that put spread and then turning around to sell 60,000 of the 19 calls again in September for about $3, and then picking up 60,000 of the SEP 21 calls for 40 cents. So doing that for 60 cents, doing the whole thing for $1.04. So again, he sold the SEP 13, 15, 19, 21 iron Condor in there, obviously thinking VIX ain't going nowhere outside of that range anytime soon, at least for the next 3 months. This is kind of an interesting play, Mark, because just given the huge vacillations we've seen in VIX of late, the huge volatility of VIX we've seen of late, that's a bit of a dangerous road to hoe. Again, he's got himself a pretty wide range on this. Obviously, he's got the 15 and 19. He's got a cushion of $1 in either way on this, so he's really got about 14 to 20 before he starts hurting them. That's a pretty decent spread for September, but still, we have seen VIX be very volatile of late. What's your take on our friend here? Blasting away a size 240,000 contracts that the VIX ain't going anywhere anytime soon.
So reversion play on kind of the new normal of VIX hanging out 15 to 17. The SEP future at the time was actually a little over 19, about 19 and a half. So the trade actually starts out bearish, a futures position a little bit, but primarily he's really selling huge volatility. And, VIX September vols in the 90s, not a bad sale. And he is making a bet that VIX is going to stay in our new normal range of 15 to 19.
Yeah, that appears to be, last couple of weeks notwithstanding when it broke out to the upside, but that does seem to be the traditional new framework for what we're seeing for VIX, at least in the modern Yellen/Brexit era of a little bit more vol floating around out there, a little bit higher than your traditional range you might consider for VIX, but still a lot of stuff to be considered out there, including our next paper, kind of related, obviously, to what we were talking about a wee bit earlier on the show. We were talking Hershey earlier. Now let's talk the other side of that. Let's talk Mondelez, ticker symbol MDLZ, closing today right about 45.5. Up about 250, nearly 6%. Not an unusual bit of merger arb when you see both the acquirer and the acquiree getting a nice lift, but they're up about 6% today. This is the name that does, on a given day, about 11,000, doing, about 53,000 contracts today, so nearly 5x. About 3-to-1 calls over puts. That should tell you pretty much what caught our eye out there. It was pretty much all calls all the time. What caught our eye out here in particular were the AUG 47s. That seemed to really be the strike du jour. That's where the action was. We saw customers coming in tied and untied, so doing a little bit of both, gobbling up about 16,000 of these bad boys, including some big blocks of just about a block over 13,000. That's a pretty sizable block, paying quite a bit here for this one. I think 82 and a half. I'll have to pull up the exact. Yeah,
it was 82 and a half
cents. Yeah, on those bad boys. And then looks like again, this is a paper that is pretty one-sided. Even with some of the tied components selling some stock, this is obviously clearly some upside plays here, not just on the paper we saw, not just in the activity, I should say, we saw today, or the developments we saw today, but also this paper this is August, so it does include earnings in July as well. So our friend here perhaps betting that the good times are not exactly behind us here for good old Mondelez. Looking back on a chart of them for the past a year or so, they have seen some interesting activity of late, hitting back when the market was kind of in its nadir there back in mid-February, hitting a low of about 35.5 or so. Since then, it's been on about a nice 10-handle rally. Certainly a lot of that coming back in just in the last couple of sessions as this big deal has kind of played itself out in the market. In fact, just a few sessions ago, it was trading in the low 40s. So getting a nice lift off of this deal, which is kind of odd. We don't see that all the time in a lot of these M&A deals. So interesting stuff, Mark, here. It seems like if you went into this deal playing calls on either side, you came out smiling for the most part.
Yeah, it was clearly one of those instances where they really like the synergy, and they really like the two put together, and that seems to be why the upside action was so bullish today. You might have thought like, let's do a little call over right now. The guy wanted these calls, and they kept trading, and Mondelez kept going up. So just tells you they like this deal.
I'm trying to remember the last time we've seen a big M&A deal like this where both sides caught a bid off of it. It's been quite
We
some
saw
time.
some of that. We saw a lot of that in 13, where when the market can only go up. We did see some of that. But this one seems to make a lot of sense. They really do. The nice thing is that this maybe affects distribution and how their candy is distributed. But it's not like Mondelez makes a bunch of chocolate. So this is maybe a better deal than if Nestle had bought them.
Yeah, you got to go back, a few years in market history to really find another big deal like this where both sides caught such an aggressive bid. Certainly not in recent history, and not certainly in the odd block anytime recently have we talked about this. So interesting one. We'll keep an eye on this. Obviously, we're going to keep an eye on what happens with those 20,000 of the Hershey July pars and 05s floating around out there, because I'd imagine some of those may be frozen for the near term while they do some sniffing around that strike. That's one of those things. The size is so big, they can't help but not see that one. So if you do 300 contracts, 200 contracts, you maybe slip under their radar. 20,000, that's a little bit of a different story. Let's move on here. We'll keep an eye on that one, obviously, as we move on to our final name, our final victim. Call them what you will here on the old odd block. This is, I believe this might be a newcomer. This is Encana Corp, ticker symbol ECA. If you're not familiar with these guys, listeners, this is a Canadian-based energy producer. They export natural gas and natural gas liquids and all that fun stuff. Closing today, $7.79, off about 30 cents or about nearly 4% on the day. This is the name that does decent volume for an odd block candidate, about 47, nearly 5,000 contracts a day. Today, doing quite a bit more than that, but nearly 19,000 contracts. 30.5 to 1 puts over calls, listeners. That should give you some inkling of where our attention was drawn out here in ECA. And when we dug a little bit more into that, we found a lot of paper going up out here in August. In particular, it was the AUG 7-6 put spread going up for some size, shall we say. Going up when we first caught our eye on this guy, about 9,000 times the spread went up of the AUG 7-6 put spread, doing it for about 19 or so cents, actually about 21 cents here, doing it, buying the AUG, 9,000 of the AUG 7 puts, and selling 9,000 of the AUG 6 puts. Let's just dive in here really quick to see if any others went up after the fact. Actually, that's about the sum total of it, about 9,000 of the spread. So again, we said about 18,000 and change contracts going up today, pretty much 18,000 of them coming in this one monstrous spread. Not a lot of open interest to speak of, just a couple hundred contracts on each. So clearly, this is opening paper. And looking out here as to the past year or so out here in good old ECA, as you might expect, back earlier in the year, the Jan-Feb timeframe when everything was getting hit pretty hard, including a lot of energy names. ECA was kind of in the toilet compared to now, trading about $3 or close to that range, which is a far cry from where it is today, $7, a comparatively lofty $7.80 or so. So this bad boy has seen quite an impressive rally. You could certainly understand why someone might want to pick themselves up a little bit of protection, particularly if they've been sitting on this name for the last few months and they've had it pretty much this name double on them in that time. I mean, 7.6, you may argue, is a little bit tight. Maybe you want a little bit more protection. Maybe is it worth selling that 6 put? That's maybe debatable. But again, not a lot of bids on the 5 puts out there, so you kind of got to take what you get. But still interesting stuff. Mark, what are your thoughts, A, on this trade overall? And then B, in a scenario like this, you got a stock that rallied quite a bit. Would you be selling that 6 strike, or would you maybe be looking to do something else or just hedge outright?
Well, I mean, they reduced the cost by 40%, I guess. I mean, that's a little cheaper. Maybe I would have considered even doing it 1 by 2.
Yeah.
To really get the cost down. Then that would be interesting. Maybe the guys says, hey, if it gets below 5, I'll take the stock back. I want exposure. That'd be another or below 6. That'd be another reason to do it. But might just be he didn't want to pay more than $180,000 for his hedge, or $200,000 for his hedge, and this trade cost him $198,000 plus commission.
There you go. He had a ceiling from his risk manager, $200,000 and no further. And he managed to make that work. Again, we're not scoffing. You're right. It did reduce his outlay substantially. And again, good luck getting any sort of meaningful bid on those 5 puts. So maybe his strike options were pretty limited. Not a lot of half strikes floating around. This thing has had a very recent run-ups, not a lot of liquidity, and doesn't do a lot of paper on a given day. So good luck finding anything better. So I don't scoff. I just like to dig around in these trades a little bit. We have earnings coming up on the 21st of July, so we'll see. This trade obviously includes that. So we'll see. Obviously, our friend here perhaps a little concerned about giving some of that back, and at least in the near term is concerned about giving back about $1 or so and doesn't want to do it. I can understand why he might be so inclined. Interesting stuff. Speaking of interesting stuff, it's your guys' turn here to provide us with said interesting material. Because it's Thursday, that means it's time here for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. It's Thursday. That means it's time for you guys to join the crew with your questions, your comments. You guys know how to do this. Hit us up on the website. Hit us up via the app, social media, et cetera, so on and so forth. Unfortunately, no live stream today, so you can't hit us up that way. But we'll see what we can do for you. Let's hit it up, see what we got, how many we can get in today. Starting off here, got a bunch of comments coming in about that story we mentioned earlier about the guy stealing a bunch of money from the SIBO. James Boland saying stealing nearly $7 million from colleagues and relatives can make for an uncomfortable Christmas party. Yes, I agree with that. Good luck explaining that one at the next holiday party. Of course, I don't think our friend there will be attending if that's the case. If all this is proven true, Frank also writing, he must have ripped somebody off. Really important then to have the CFTC come get this. That could also be the case. They say he picked off about 30 people over there on the SIBO. Maybe some of them ranking kind of high, and maybe they rang the bell over there at the market reg side and said, "Hey, this guy's ripping us off." I could see something like that coming in too. More comments coming in. We got Bruce X555. Excuse me. He says the Brexit thing. Some nimble-footed traders have made a lot on Brexit, and I reckon plenty have lost plenty. Well, I could certainly concur with you there. There's been a lot of, we just talked about on top of the show, a lot of ups and downs, both from a vol perspective as well as the broad market. Kind of understandable as we kind of digest all of this. A lot of more comments coming in. SGD NYC. I want to touch on this for a second because we see a lot of people. We have to keep repeating this. Well, I'm going to repeat it again. This guy writing, we posted out some trades we saw. I forgot the name. We talking about paper buying this, and this guy writing in saying paper trading is garbage, doesn't do anything for you. Let me just clarify yet again. Paper means customer. So when we put that out there, we're not saying, hey, we paper bought 15,000 of these calls in our paper trading account. You're saying paper did that. For their own purposes, a.k.a. the customer bought those. So just a reminder.
Yeah, and customers who bought Hershey calls and made $3-4 million. Just remember that.
Yes, customers did all right on that one, and also paper, aka the same thing. So I'm going to say that every month or so on the show, so people can get that into their heads. All right, this question
Who cares about paper trading? Come on, Mark. Yeah. I thought this was the Options Insider, not the Options Paper Trader.
What kind of insider are you that only trades in paper trading accounts? Terrible. All right, moving on to a question here from Robert. Robert Kornacki. He writes, hey, on a debit spread, is the most you could lose is your credit. I think he has that backwards. The debit spread, in most scenarios, you're obviously a debit being what you're paying for is the most you could lose your debit. Yes. Except for some scenarios, we can get into those. They're kind of esoteric, but obviously in your typical straight up vertical, if it's worth $5, you pay 50 cents. 50 cents is the most you're going to lose in most of the scenarios. You're talking about some calendars and things like that. That's where things get a little bit funkier because obviously you could pay a debit for something that could actually end up moving quite a bit against you. We won't burden you with those. But yeah, in the most scenarios that will interested listeners of this show, I would say your debit is pretty much that's the attractive thing about options, right? That's why your outlay and that's why long premium is nice on occasion. I mean, it has all the problems with theta and everything else that go along with it, but on the flip side, your risk is mitigated. That's a nice thing. Uncle Mike or Mark, anything to add to our friend Robert here, who wants to know how much he can lose on debit spreads?
The only thing I would add is that if you're in a portfolio margin account and they might not require the full amount and you're just levered to high heaven, I guess technically you could lose more than what your maintenance requirement would be, but that would be have to be really, really levered to have that happen.
I would say that you can lose the same amount that you can lose on the corresponding credit spread.
I knew somehow you were going to work that into, and if you don't get that, listeners, look up your synthetics. All right. Actually, this is another one. He's been sending a lot of questions in, this guy. I don't know, Mike, did you guys answer this last week about him naked puts? Did you answer that question on the show last week?
We did.
Okay, so in which case I will table that one. He can only get one per show anyway. I don't want to squeeze in too many from the same guy. All right, another one here. A lot of people asking, did you guys talk about mini options last week?
Yep, we did.
Now, yep.
Yeah, a lot of people, I don't know what's going on. Is there something in the air? Are they coming back? I don't know. All of a sudden, everyone's writing in about mini options. If you're interested in mini options, that's cool. You kind of missed the boat.
I guess Google and Amazon, it makes sense. Although I don't think they have them anymore, do they?
No, they
other than the ones that were listed.
Every exchange that listed them pretty much effectively delisted them. And by listing them, they said they're not going to list anymore, which is effectively the same thing. So once those ones expired, I think that was about a year ago. Most of those started doing that. That was pretty much the end of minis. If you had to ask me what one of my biggest surprises in the options market for the last couple of years, I think the death of minis is probably way up there, just because there was so much interest, particularly when Apple was around 700. And all these names are flirting with these premium prices, and minis had so much support from everybody. Wanted them, brokers wanted them, exchanges wanted them. They also liked them as an opportunity to take advantage of their customers. So they definitely liked them. Maybe liked them a little bit too much. So they kind of went away. I don't know why everyone's writing in about minis. I wish they were still around. I wish they were still a viable thing, because I think they were awesome, particularly for. And then, like Mark said, there still is a use case for them right now with Amazon and Priceline and Google and a few others still trading at fairly lofty levels. A mini would make sense if they just. And the problems with those, obviously, Mark mentioned the commissions. That was huge. The spreads were terrible, so you had to pay not only full freight for a 1/10 size product, but also pay more on the spread than you had on the regular option. So.
And did the SEC? I don't think the SEC adjusted the margin requirement.
I don't think they did either. So yeah, it was.
I think that minimum haircut. So the SEC kind of screwed the pooch too a little bit.
If you can imagine the entire industry collectively dropping the ball on a product that should have been a home run, that's exactly what happened. Everyone saw it as a way to just feast on the customer. Exchanges, regulators, everyone dropped the ball. Brokers and market makers never touched them, so they also dropped the ball. And as a result, this cool product went nowhere and died. Yeah, it's kind of a sad thing. Unfortunately, they didn't go on very well. I could go on more about minis, but we got to keep on rolling with the show. Good questions, everybody. Keep them coming as we move on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. This is indeed the portion of the program where we break down what's on our mind, what's on our screens for the coming week into the weekend. In this case, it's a bit of a long weekend, actually, here in the States. And, of course, market-wise, as we all take a day off on Monday to celebrate the great and glorious birthday of this nation here. So no trading here on Monday. And as a result, we're seeing some vol come in. We talked about that at the top of the show. As misguided as perhaps that might be, that is probably one of the main reasons why we're seeing that right now. Aside from that, not a heck of a lot as we see the Brexit shakeout. Not a heck of a lot specific, I don't think, on our collective radars. Mark, you mentioned non-farms coming up after this holiday weekend. Anything else on your radar now for tomorrow and going into this weekend?
Well, we did have a huge run-up, and we just had the quarter end. So I'm going to be watching to see whether this was a little bit of window dressing, and everybody decided to run up the stock market into the quarter so they could be green on the quarter, yada yada yada, and whether we'll be off a little bit tomorrow. That's about it, because we don't have non-farms again our next week. You want to know? Speaking of non-farms, Mark, So I was talking to a broker because I wasn't 100% certain, and I looked on Bloomberg's calendar, and Bloomberg's calendar said, "Hey, yeah, they're not till next Friday." Then the buddy I was talking to went on BLS, which is who releases the data, and the BLS calendar said tomorrow. And in fact, Bloomberg was right, not BLS, who actually releases the data.
Yes.
And you wonder what's wrong.
Our old friend, the Bureau of Statistics.
Yeah, and you wonder why they have to make adjustments every month.
Well, maybe, who knows? Maybe we'll get a surprise number tomorrow because they think they're doing it tomorrow. So maybe that should be a reason to buy some. Should have bought some vol today, just in and of itself. They don't know what day it is. Bureaucratic incompetence equals buy some puts. I like it. That's good and terrifying at the same time. Uncle Mike, same question for you, sir. Anything that's really on your radar for this week into the weekend?
Yeah, I want to see if bonds come down at all. I mean, we are at very, very, very high levels in TLT and IEF. Watching gold, I did end up getting, just to tell everyone, I did end up getting into a married put position. So I did not go with the knockout collar as I discussed earlier in the week. I ended up just with a long GLD and long a married put.
You
I
tease everybody with the knockout collar, and then you do a bait.
I couldn't resist the low vol. I could not do it. I could not resist.
Look at you buying stuff. I'm so proud of you, Mike.
But I could not resist. So, but I do intend to maybe do some adjustments to it in some way, but I'll keep everyone posted on that. But no, I just want to see if bonds come down.
Yeah, Mike, they are kind of, if there was anything that is still screaming, we're scared, it's bonds.
Yeah. So that's what I'm watching.
And moral of the story, listeners, listen to Uncle Mike's strategy block and then do something else entirely, because he's not going to do it. He's just going to tease you with it and then do a plain old boring married put, sir. So I say to you, I don't know what to say to you. I'm just disgusted. No, I'm just kidding. All right, that's going to bring to a close the Around the Block's also going to bring to a close this little bit shortened pre-holiday episode of the Option Block. We want to wish everybody here, of course, a great holiday weekend here in the States. And if you're overseas, hey, enjoy our day off. It could be yours as well. And before we go, let me check back in really quickly with my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Starting off, let's start in reverse order. Uncle Mike, what's cooking with you, sir?
Hey, if you're looking for someone to help you with investments, with buying married puts or knockout collars or all points in between, contact me. I'm happy to help work with anybody. 312-212-3531 or send me an email at mtusaw@rcmfs.com.
All right, and Mr. Sebastian, give us the deets on this big event you have going down in Chicago, sir.
Yeah, it's the link will be in the show notes. I think Mark's putting out an email sometime in the next couple of days. We've got our Option Pit CBOE Professional Traders Summit. You can get the link in the show notes to sign up. It's a 3.5-day event. We're going to do a Cubs game. We're going to have all sorts of live speakers. We're going to do a live Option Block podcast. I think we're going to do an episode of the Business Show maybe. And we're also going to have a steak dinner, cocktails. We're going to do a mock trading session on the floor of the CBO. It's going to be pretty stinking awesome. And it's a massive value. So if you want to see me, Mike, Mark, and then a bunch of other professional traders, Andrew, the aged rock lobster. Happy birthday, Andrew, by the way. Happy 50th. Then come out and sign up. It's in the show notes here.
Yeah, and the Business Show, that session gets a little blue, so that'll be 18 and over. But the rest, bring the family, bring the friends. Everyone wants to hear about fun trading stories. So check it out. That link is on the show notes. We'll put it up on the website. Probably tweet it out as well. So stay tuned for that. And on behalf of the greasiest of greasy meatballs and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great questions. Keep them coming. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.